It's Bank of America's urgent warning to all investors. I'll show you why they say you need to act now. Plus, we got some great trade setups for you, and the Widowmaker's back. This is one show you don't want to miss. Now, let's over to Bloomberg, where he picked today's strip with the headline. As BofA's Hartnett says global stocks are close to a sell signal, but is he right? Well, we're going to put him to the test. Let's take a look at why he's saying you need to get out now. He cited data points on fund flows and market breadth as evidence that investors have been rushing into risk assets and that positioning is getting stretched. And yet at the same time, we've noted that hedge funds are still short and that asset managers have raised cash and missed out on this rally. So the signs that the market may be stretched, well, if it pulls in some more buyers, it can go even higher. Traders often use that as a bearish signal because it can theoretically indicate that buying power in the market is likely to soon be exhausted, leaving prices vulnerable to a pullback. And yes, that is the case. If we see buyer exhaustion show up, that everybody who wants in is in, yes, the market can reverse. But the problem is if it grinds higher and it pulls in people that are short or on the sidelines, watch out. There's absolutely no reason we can't see new all-time highs. At the same time, the market is approaching what he says is overbought territory. About 84% of country indices are above their 50 and 200-day moving average. His sell signal is when that metric reaches 88%, but what if that number can go even higher? I'm going to show you why it can and why this may be one of those cases that Michael Hartnett, one of the best in terms of investment strategists, may be wrong. The Bank of America data highlights a nervousness among traders about the rapid pace of recent stock gains. The combination of the Trump administration's tax package to boost growth, plus a softer stance on tariffs and robust economic data, has fanned optimism. But not only that, we have the Federal Reserve meeting coming up this month, and while they're unlikely to cut rates, they could be cutting rates as soon as July, and we know that traders love that, and it often sends stocks even higher. But let's continue on. For U.S. stocks to get back to all-time highs, we have to get rid of uncertainty, but most catalysts are elusive for now until the trade war chaos resolved, and this is from a managing director of a firm who's putting hedges on their portfolios to protect against the sell-off. And it's not about uncertainty, it's about direction. And if stocks continue to go up, what it means is those who are short or on the sidelines are going to be forced to buy back in and chase this market higher. But what could push the market up? Well, let's talk about machine positioning, because for the moment, we're seeing CTAs hit the pause button, and in a flat tape, they're going to be sellers on global equities to the tune of about $1.8 billion, only a small amount out of U.S. equities. But in an up tape over the next month, there's still buyers over $5 billion of global equities, and of that, $5 billion into the U.S. So we could see some serious buying power come back online from the CTAs. But it's not just them. It's the risk parity and vol control strategies. When you put the three together, you find out there is a lot of buying from these systematic machines that could send stocks up. Let's take a look at this chart on the right. We see systematic position in U.S. equities across the CTAs, risk parity and vol control funds. And you can see their position is far from normal levels. They've got a lot of buying left here to go. But how about this? Goldman notes that a lot of fund managers have missed the rally and are facing a critical question. Do you play chase or hope for a pullback? And that's exactly the problem here. A lot of fund managers were under pressure to raise cash to hedge against a market downturn, and now we're seeing the market continue to grind higher. And a lot of people look at the equity markets and think it's a proxy for the economy. That isn't the case, and this is one example. We could see stocks go higher and the economic data continue to weaken, and it's all about positioning. Let's take a look at funding spreads, because we can see that on a net basis, a lot of funds are short this market as we see the market continue to rally. That means if they want to play chase, they've got to lever up in a big way. And we could see, again, machines pushing in fund managers. And on top of that, you could see, of course, hedge funds coming out of their short positions. You can see a lot of buying here, again, despite the fact that we see weakness in the economic data. But let's talk about breadth, because Michael Hartnett says that's an issue. And based on the next chart, well, what it suggests is we could see a lot more driving breadth higher. Let's take a look at the S&P 500. We see about 52% of the S&P 500 stocks are trading above their 200-day moving average. If you want to talk about overbought, well, we need to get somewhere up into the mid to high 70s, and we've got a ways to go. So there's a lot more breadth that could push higher here before we get into true overbought scenario. Now, I know what Hartnett's suggesting here. He thinks a trade war is going to continue going on. He thinks a lot of people are going to stay on the sidelines due to, of course, the upcoming earnings season. But as we take a look at the charts, I think you're going to get a completely different perspective. Let's start out with the S&P 500. We know momentum is positive. How do we know that? Well, we see the relative strength indicator. That's a technical indicator. It's above 40, currently at 65. The MACD, or moving average convergence divergence, it's got a negative cross, but it tends to be all over the place, which is why we like to aggregate these technical indicators together right alongside with the trend. We call that Momentum Timer Pro. Right now we see 25 consecutive daily buy signals. We see momentum over a 30-day window stretch, and yes, momentum continues to push higher, and as long as it does, you're going to see a lot of the systematic machines keep buying. Now, we also mimic machine positioning. We call this our CTA Timer Pro. You can see on our fast algorithm, we're modeling 100% long, and on our slow algorithm, also again 100% long position. The reason we anticipate where the machines go is because we run a historical overlay. So our models, and again, you can trade both machine positioning, momentum. Grab the links in the description below. Use those coupon codes for your free 30-day trial. Based on what we're saying, machines have to keep going here. Let's take a look at the charts, and I told you we give you some great setup. Well, let's talk about the S&P 500 here, because what we see here in red, it's called a 6-month volume profile. That's where most of the shares have been traded over the last 6 months, and right now it's acting as a level of support. If you're looking for a bullish case here, a reason to see the S&P rally back up near its all-time highs, what you look at right now is a volume profile line, and you've got to make the bullish case here, even though we can see from a technical perspective, we're pushing near overbought territory. When you factor the breadth component in it, what you can see, there's a lot of potential for this market to move. Now let's talk about the NASDAQ 100 here, because we see the same case. About 64% of it's trading above its 200-day moving average, so more than the S&P, but it's still got a ways to go too. If you want to get into an overbought scenario, when you look at breadth, you've got to get up somewhere again around that 80% level, just like the S&P. But let's take a look. Now, you'll note we don't have any positions on this to our subscribers, but we talked about a couple weeks ago on that gap up move that was driving more machine buying. We said on the show that was a buying indicator. Now, I have bought into semis, and I got a small position in that, and I'm looking to add more. Let's see if that makes the case here. As we now turn to the QQQs, what do we see? Momentum is positive. It's the RSI pushing near overbought territory. That would be around 70. MACD's got a negative cross, but again, on its own, it's very hard to trade, which is why we pair it with other technical indicators and the trend. We see 28 consecutive daily buy signals here. Our 1-month windows maxed out. Our machine positioning set to the long side. Again, what we're seeing is all indicators that this market can go higher. Let's take a look. Again, we see the same setup as we do on SPY. You've got that 6-month volume profile. What happened? Price gapped up, rallied into it, got rejected. Sellers came in, drove the price down. Buyers said, no, we want this. Pushed it right up into that volume zone. Sellers were still there, and now all of a sudden you're breaking out. You're looking at all-time highs here within reach on the NASDAQ as well. But is there one major index you might want to pass on? Well, that's the small caps. Let's take a look here, because on a breadth perspective alone, you can see it didn't keep pace. And what we're seeing in the market here is the market telling us that, of course, small caps, because of the trade war, aren't going to be big beneficiaries, not compared to their big brethren who are seeing massive corporate share buybacks. Keep in mind, the blackout window is coming up soon, but let's move on to breadth here, because what we see is breadth can go a lot higher, and right now it hasn't been, and that's a red flag on small caps. But despite that, momentum remains positive. The RSI is at 64. The MACD's got a positive cross. And even though we're seeing 24 consecutive daily buy signals, is this one to avoid or one to buy? We'll take a look at the chart, because what do we see from machine positioning? Mostly stretched here. We could see some more buying. Momentum again stretched to the long side, and that's a positive sign if you're looking to pull other investors in. And that's what a lot of these machines are set to do, is bring those hedge funds and asset managers back into the market. But if you're looking for another potential trade, check this out. Right now we see small caps trading the supply zone. We've seen sellers at this level, but right now it closed above a 6-month volume profile. What is your red flag here? What is your overhead resistance? Watch that 200-day moving average. If small caps can break that, and let's zoom out to the 1-year chart, well, what happens is now you see overhead resistance at 221. You want to see it get all the way up to 228 if you're long here. This is one of those cases, if you're going to trade this, keep your stops tight. Any trade war knows could send that reversing and hard. Let's talk about the energy sector, because right now we're seeing a lot of short interest in crude oil, but could that actually spur a move higher? Now keep in mind, we've noted that B of A in the prior reports from last week said the machine positioning on WTI, it's negative here, they're short, but at over 64, the machines start to short cover. We could see a major tailwind in the energy market. Now I've got some positions on oil and gas producers, but let's take a look at the broad energy sector of XLE to see if there's opportunity for this to go higher, or perhaps maybe this is one I should cut and run on. And what do we see? Momentum is positive. The RSI is at 52, so it's lagging behind, of course, the S&P and NASDAQ. You'll note the MACD's got a positive cross, and that just flipped on our Momentum Timer Pro that's been oscillating between buy and sell signals here. Now, machine positioning, well, based on a historical basis, they could be buyers here in the near term. Let's take a look at the chart and see, do we find a bullish case or a bearish case? Let's find out. Because looking at the chart, well, you can see there is a wedge pattern forming here, what's called a symmetrical triangle. But let's zoom in to see, does it break up or down? Well, when we look at the 10-day volume profile, you can see plenty of support, and price rallied off of that on Friday. Let's zoom out to the 30-day volume profile, and once again, you see a lot of buying underneath there. And again, price jumped off of it on Friday as well. How about the 90-day? Yes, it's holding. So from a volume profile perspective, from a machine positioning perspective, you've got to make the bullish case on energy as well. So far, you've got some great traded setups here. You got the S&P, you've got the NASDAQ, the Russell 2000. We'll put that as a maybe. You've got the energy sector. And what's next? Let's talk about financials, because right now we're seeing there looks to be in the news, they're losing momentum. And remember, financials were going to be a big trade. We made some money on that for our subscribers. Then we got out, and guess what? We're seeing some signs on our reports we're back in. I'm not going to tell you which securities they're in on, but I can tell you I've got some positions on financials as well. The question is, should I add them on the notion that the Fed is likely to cut in July? Could be a big catalyst, or is this one of those we're getting too near the all-time highs and perhaps it's time to lock in gains and go? Let's find out. As we take a look at XLF, we see momentum is positive here. The RSI is at 60, and MACD's got a negative cross, but that's not a big deal. Momentum Timer Pro, after one daily sell signal, is back on the buy track, and we see on a 30-day window, it's maxed out. We also see from a machine positioning perspective, it backed off on the fast algorithm, and this could be a catalyst to chase price higher. Let's take a look at XLF now, and what do we find? Well, the volume profile right there at 6 months, we see, again, price rallied up, got rejected, pulled back, rallied into the 6-month volume profile, closed over on Friday, suggesting, again, we could see a push here. Again, that volume profile line looks to be a heavy level of support. We can see on the 1 year was a great level of support. And right now, based on what we're seeing, yes, financials look to make a run at their all-time high. Be watching this one over the next couple of days. Make sure it holds that 6-month window. If it does, what I would be guessing we're going to likely see from a technical perspective is a MACD turn higher, the RSI turn higher. You're going to see money on the bets that the Fed could cut rates in the months to come, drive financial stocks up. But let's talk about emerging markets, because this is one that Bank of America noted was the trade that everyone had to be in on. Now, we made some money, but not on EEM, on other emerging market stocks. But let's talk about momentum. It's positive. The RSI near overbought territory at 68. MACD has reversed a little bit, showing a negative cross. What do we see from momentum perspective? 5 consecutive daily buy signals. Momentum stretch again on the 30-day window, but we've noted in the past that's not a major deal. We see machine positioning pull back a little bit. bit and is now looking to be buyers here. But is this one I want to play chase on, or one I'll just say, hey, you know what? We missed it. It's okay. We made money on Brazilian equities, and I think that's my perspective here. But I want to know what you think. Are you chasing EEM higher, or when you see this chart, do you want to chase it higher? Because let's zoom out to the 5-year window, and what we see is it ran into resistance right where I said it would likely run into. Now it's pushed up above that. If this breaks out from a volume perspective, you're looking somewhere up here around 49, and a lot of people are long this on the bet that the dollar is going to continue to weaken. But will the dollar keep weakening? Well, we're going to look at that in a moment. But again, are you betting big on EEM? What do you think when you see this chart? Weigh in the comments below. What are you looking to trade after you see the show today? Let's talk about the long bond, because Bank of America's hard, and he has been bullish on this, but we'll say maybe he's too soon. We put a trade on this to our CTA Timer Pro subscribers back on the 30th. As we noted, machine positioning was starting to move, but we got stopped out pretty quick on that one, down 1.19%. While we have some great trades, one of the key things about trading is risk control, and so in this case, we got stopped out quickly. But notably, I keep this in mind. If we do see some hint that the Fed could be cutting in the months to come, I think that is the case. If inflation continues to cool and the economy continues to drop, you could see a massive tailwind behind bonds. Could be one of the biggest trades this year. So let's take a look. There's a reason why we were very interested in that, but it didn't play out. Now, from a momentum perspective, we've got a massive sell signal on the 30-day and, of course, on the 90-day. Look at that, 27 consecutive daily sell signals. Machine positioning backed off a little bit, remains short on our slow algorithm. But let's take a look at the charts, because I think there's going to be an opportunity, and I think Harton is going to be right. Just in case he may be a bit too early. And what were we looking for? Nothing more than a rally up to the 6-month volume profile here. We noted that momentum was rising. You see the RSI up, you see the MACD up, but what happened? You see price got clobbered right into our stop loss level. Let's look at the 10-day window. What do we see? Price just below it. There is your red flag, at least in the short term for a trade. You see it's right on the 30-day window. And how about on a 90-day basis? Well, we've got room to run to get up there. This is a trade that I'm going to be very interested in, but today I think we're going to pass and wait for the next signal to generate. But let's talk about gold, because we're now seeing a pullback. Is this a bullish window for gold? Is this a time to buy, or perhaps is this a time to sell? Let's take a look at the chart. We'll get your opinion on this in the comments, because what have we seen? 2 consecutive daily sell signals. Not a really big deal here. We're seeing machine positioning is long, but that's the risk, is the machines could become sellers here. Let's take a look at gold, and what do we see? A triangle pattern forming. You see price dropping right into that 6-month volume profile. Look for this to go sideways. What you want to see it resolve higher if you're bullish. If you're bearish on gold, it breaks below that 6-month volume profile. Look out. You're now looking for GLD to drop somewhere down below 290 before you start to pick up some volume. There's a little bit of a 296, but remember, if you see it break down from a wedge, from a technical perspective, you start to pick up some selling. The heavy volume not down till 268. But let's talk about GDX, because a lot of people are long the miners, well, including our Momentum Timer Pro subscribers. We're up 3.5% on that trade. Here's our live stop loss level. Again, we raise this up. Anytime we see a trade go up from where we buy, we raise our stop loss level. We want to hold on to the gains, but when we start out, we want to give a security a little bit of room to run. But is this one a buy still, or a sell, or a hold? Well, let's take a look at the chart and see, because right now what I'm seeing looks like a hold. You see price rallied up, ran into a little top here. It's pulled back pretty aggressively on Friday. Let's zoom out to the 5-year chart, and what do we see? Well, sky's potentially the limit here. Let's zoom out to the max weekly, or the 10-year weekly, and what do we see? Again, this thing is trending at levels we haven't seen in ages, suggesting a pullback may be necessary. That's why we raised our stop loss levels. What do we see? Momentum coming off near overbought territory, starting to slow down. But again, where gold goes, likely to see the miners follow. But how about the dollar? Momentum is negative here. We don't see an opportunity to buy the dollar just yet. But we got some other trades. Let's talk about our trade on copper. We mentioned that last week. We still have that open signal on that. Down slightly, 0.69%. There's your live stop loss level at 28.94. Let's take a look at the chart on copper. What do we see? About the same thing we see on gold miners. Nothing here that says we have a warning sign, but it could be just a pull back into some volume here. If this goes higher, we're going to tell our subscribers to raise their stop loss levels for sure. But how about the Widowmaker? Well, it's a U.S. natural gas. This is one of those you can make a lot of money, or as it's called, the Widowmaker, you can lose a bunch too. Trade this carefully. We put this onto our subscribers. Actually, this is our CTA Timer Pro subscribers, not our Momentum Timer Pro subscribers. And why is that? We see some buying in machine positioning. We haven't seen momentum change, but let's take a look at the chart. I want to know what you think. Is this a trade that you would make? How about this? Look at the 6-month volume profile, close right above it. But again, we're going to summer months, usually not a bullish case for natural gas. Do you think this thing squeezes higher, or is this just a false move? Keep in mind, we kept our stop losses tight for a reason, because this is one of those trades. It can go big or it can go bust. And in that case, again, you want to trade with your stops tight to keep your risk under control. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.